Alright, ladies and gentlemen, today I'll be showing you guys the market maker sell model and the market maker buy model and the market maker X model. I'll be displaying each and every single one of those today in today's video, and I'll give you a brief overview as to how I basically traded the market maker buy model but eventually lost. But I'll explain why I lost and how we could have prevented that loss from happening. And that is going to be basically all for today's video, and I'm going to show you that right now. All right here, guys, I have the market maker buy model, the one I traded today, and today I'll be displaying this, but of course I'm going to show you the market maker sell model. But this is a brief overview of the market maker buy model basically. So we have our original consolidation right here, and then eventually we have our first leg of distribution down, and then eventually we tap into a higher time frame draw liquidity or a PD array. It could be a fair value gap, it could be a breaker, it could be an order block, a mitigation block, a propulsion block, it can be a rejection block, it could be a balanced price range, it could be a fair value gap, order block, or breaker block, and then eventually we start to have a reversal. And then you can see right here, in order to have a reversal, sometimes it won't even take out a draw on liquidity, but it'll be inside of a PD array. And in order for you to have a reversal confirmation, you can have an SMT divergence with another correlating pair right here to have correlation to see, if one of them created a lower low, the other one created a lower high like this, and then eventually you're gonna have that confirmation for going higher and higher prices. And then we have our first leg of distribution up, second leg, and then we have our third and final one that passes up the original consolidation, and that is pretty much the market maker buy model. And I'll be displaying the market maker sell model right now. Before that, you're gonna want to use power. If you can use power 3 with the market maker buy model. Will be very, very helpful, but this is universal. It can be on any time frame, doesn't matter. It could be on the hourly chart, it can be on the 5-minute chart, it can be on the 1-minute chart, or it could be on the daily chart. This is universal. Again, any time frame. Could be I prefer a higher time frame draw liquidity. Pretty much. Yeah, all right, so basically here we have the market maker sell model basically, and this is pretty much the same thing but in just the reversed manner. You can see here again, so we have our original consolidation, usually during Asia for a higher time frame, but of course it doesn't have to be. This is why I don't like having a certain time window to anticipate these type of distribution and consolidation and manipulation phases, because this can be universal. It can be on any time frame, so I don't want to give you a specific set of standard and rules. That's kind of why I'm waiting for the market maker X model for that, of course. And then original consolidation, then we have our first leg or distribution up, and then eventually we have a higher time frame draw liquidity or PD array being tapped into. Then we have the smart money reversal. You can see price just keeps dropping and doesn't want to continue any further. And then we have our first leg, our distribution first leg, then our second distribution, our second leg, and then we pass up the original consolidation. So this was the trade I basically took today, I should say, and it didn't go in our favor, but of course I'll explain why. And this is basically the market maker buy model being displayed, but it didn't pan out. And let's go to the chart now. But you can see our our original consolidation, first leg down, then we have the smart money reversal here, and then eventually basically I'll explain what went wrong inside basically inside of here, I guess you can say, but everything else was correct in my opinion. But you can just see in here where we went wrong, and in my opinion it was really just the time aspect. We entered around lunchtime because I thought this trade was going to go to the moon. I thought it was going to leave. I thought we weren't going to go any further. But again, our higher time from draw liquidity for this was this weekly order block or this weekly fair value gap. A lot of people are going to be asking in the comment section, where was your higher time from draw liquidity? It was this weekly buy side imbalance, sell side inefficiency. And if you go to the daily time frame, you can see we swept this area of basically sell side liquidity, and then we have another buy side imbalance, sell side inefficiency right then and there. That was my higher time from draw liquidity. And then if you go back down to the 15-minute chart, we already swept some more sell side liquidity. And of course, in my opinion, I think I should have just waited for 1330, the actual start of a PM session like ICT talks about. This is where I basically we entered at the wrong time, but we had everything else correct in my opinion. It was really just the timing and the time aspect to this particular trade in my opinion. Everything else of course was correct. Our stop loss wasn't too tight. It was pretty good. We let the trade breathe, and we should have, again, this is where my initial thought was that we were going to rally up. As soon as I saw that 1-minute buy side imbalance, another buy side imbalance down here on the 5-minute, and then eventually we created a 5-minute order block, and that had me high. For me, that had high expectations, this order block to hold. But as soon as I saw this 5 minute and this 5 minute order block not holding, and this 5 minute sell side imbalance, that told me that, you know, most likely we are going to get stopped out. And just from my higher time frame perspective, and then, you know, anything under these lows was the smart money reversal. And then eventually, and then you can't even catch a move there, because there's so much distribution went into this. It was relatively pretty quick. So in my opinion, you know, the trade idea should have been, you know, around at least 13:30. Timing would have been a lot better. This is where the actual PM session starts, right then and there. You could have waited for a trade idea, and you could have probably seen, you know, multiple fair value gaps right here. This fair value gap get tested multiple times. That could have been your entry, and then you could have seen this inverse again, another inversion, or you could have just waited for your market structure shift. As soon as you got that right then and there, that could have been your entry to rally up, or you could have had another entry right here with this fair value gap right then and there. As soon as you saw price just holding this fair value gap, you could have entered at this one, because you know price is going to hold. And again, you're just in that weekly buy side imbalance. You already swept so much sell side liquidity. It's most likely to have a retracement. So this could have been your entry right then and there, and you could have had your stop loss at these lows. Price already filled this up, and there's no point in being down there any longer. So then this could have been your trade idea, or you could have had your stop loss all the way at the most recent low, and that still would have been good enough. It would have been very good, actually. And you can just see the trade idea would have been very correct. This is kind of where I was planning to hold. In my opinion, I was planning to hold to the high of day, probably all the way up here. So yeah, that was kind of why my take profit was all the way up there. I wanted to hold for a while, and I do believe we are going to get up there because of the weekly profile. If you go to, let's go to the 1 hour time frame. Let's show you why I believe price is just going to go up there. If we draw the midnight opening, so this is for today, Thursday, the weekly profile, and of course the power 3 on the monthly chart is just, for me, you know, everything was aligning very, very beautiful, and I just expected it to hit the high of day, of course, because Thursday usually tends to be a reversal day, Friday tends to be a distribution phase. So this basically right here is Monday. Let me show you the weekly profile. Monday, and this is Tuesday, and then this is Wednesday, and this is Thursday, and then this is Friday. So you're probably going to be asking, why was I planning to hold all the way up here? It's because of this, the weekly profile. You can see Monday we open up right here. This is your opening for the week, and you can just see, boom, we rally up, power 3, we drop, and then eventually we drop even further on Tuesday, because we had news on Tuesday. We didn't have any news today, but for me, we didn't hit this buy side imbalance. We never hit this buy side imbalance until today, Wednesday, and that's where my market maker buy model would have kicked in. Not right here, right here. So we had a higher time frame PDRA draw on liquidity, the weekly time frame. Of course, expected it to at least come up here. Not today, maybe probably tomorrow. You can retrace a little bit and then rally up even further for Tuesday. You know, Thursday. I meant Thursday, guys. You can rally up for Thursday. Thursday tends to be a reversal day, and then Friday, you know, just tends to consolidate like Monday. So Tuesday, Wednesday, and Thursday are probably the best trades on those certain days. It could be a trend day, a continuation, and then a reversal. PM session, we had that lunch continuation. That's kind of why our trade failed. And then we have the PM session reversal, and then the AM session continuation after this PM session down here had a little retracement there in London. Again, just the trade idea was bad timing, in my opinion. I thought it was going to be down here, but it was down here. We went even further. We dug deeper. Another thing I could have done was go on the weekly chart, and you could have drawn the consequent encroachment. That's another thing, a little mistake I had, I should say, and you can just see as soon as we tapped consequent encroachment, we rallied up, and that's a good draw on liquidity. Another one, or you could have done the 25% level. Okay, now we have the 75 and the 25% level of the Fibonacci basically displayed here. So another draw on liquidity could have been these levels right here, and you could have seen consequent encroachment was respected far more. All right, guys, so we added NASDAQ, aka NAS 100, to this in order for it to work. Again, our entry was somewhere around here during the 12 o'clock window, which isn't ideal because that is the lunch time. This is the lunch continuation from the AM session. This is the PM reversal. And in order, again, you want to see a sweep or your higher time from drawn liquidity, which could have been the consequent encroachment, I should say, of the weekly buy side imbalance. And then this right here was your SMT divergence, because this low created a lower low. Let me fix this real quick, guys. I'm sorry. So again, here you can see NASDAQ created lower lows, ES created lower highs, and that is pretty much the SMT divergence you want. This was the stronger one, this one was the weaker one, and that's why you can see NASDAQ just started to rally all the way up, and then you can see ES again just rallied up too because it was a stronger pair. But again, your entry could have been on the 1 minute time frame, just seeing that SMT divergence form real time. That could have been your entry confirmation. Again, you can't really see the SMT divergence on the 1 minute, but if we go back up to the 5 minute again, it's just the SMT divergence looks a lot more clean on the 5 minute than the 1 minute. So you should be multi-time frame and analyzing the market. Again, the 5 minute showed SMT, the 1 minute didn't, and you can just pretty much see very clearly the market maker buy model. And what is it indicating to me? Wednesday, Thursday usually tends to be a reversal. So even then, you know, late PM session, I was anticipating this for this to happen. Plus with the higher time from drawn liquidity that was formed here. Again, Thursday I'll be looking to take some longs. If Friday, majority of the time not, because this is power 3 ending on the weekly, and you can just see we're going to start up a new month. So I'm very cautious as to how we start this month and how we end the month. And of course, you know, after that, power 3 is pretty much done. This is going to be most likely a retracement and then a consolidation Friday. But power 3 on the monthly is very important because the first week shows, you know, what price action for the month coming is going to do. You know, if we're going to create the low the first week and then rally up, or we're going to create the high and then rally down. It's really, you know, it's really just, yeah, viewing that monthly time frame, power 3 accumulation, manipulation, and the distribution. So I'm going to want to see some accumulation, then some manipulation, some form of manipulation, and then the distribution down, and then the open high and low close. You know, we create the low and then we close. Pretty much this is what I'm anticipating. Low to be created right here for this month, and then eventually we close somewhere around here in this range, near around this buy side, I guess, down here, I guess, you know, equilibrium of the range. If I'm being completely honest, I don't see us going too far. Yeah, near around equilibrium, or the 75% mark around here, or up here, down here. So yeah, and I'm gonna be displaying right now the market maker sell model. All right, guys, so we have the market maker sell model here, and I'm going to be displaying to you, you know, this is on NQ Friday last week. Very, very sweet and simple. The market maker sell model, pretty much the same as the market maker buy model, but in reverse. Of course, I didn't take this trade, or else I would have showed you the example, I should say, because main reason why I probably wouldn't have taken this is because look at the time, it's way into the PM session, about to have the market closed. Either way, you know, this would have been a very good trade. So your hard time from drawn liquidity, a 15-minute sell side imbalance with a 15-minute order block. You can see, you know, we swept some sell side right here, and pretty much after that we started retracing, and then eventually, you know, we eventually created a little short-term breaker, and you can see price respected it and it rallied up, and then eventually, you know, we had our first leg of distribution up, and then eventually we started consolidating, and then we had that smart money reversal. As soon as we tapped into that sell side imbalance, we started to displace lower. And you can see this inversion fair value gap that was created, and it was eventually, you know, it became an inverse as soon as we closed below it. We retested. That could have been your entry right then and there. You don't really need a market structure shift below these lows, but if you wanted to, you could have. Then eventually you can see we have a breakaway gap, pretty much where price never comes and fills a fair value gap. You can just see why, because it's in, you know, it's above equilibrium. And again, you know, just we had multiple of fair value gaps right here, and that would probably indicate why we probably didn't want to retrace any lower, because these will probably become an inverse, and we're probably retracing to the 50% level of these fair value gaps. You can see, yeah, the 50% level, and we dropped. So pretty simple and sweet to anticipate that. And then eventually we came and we just distributed lower to this one. Yeah, this could have been your entry. You don't need a market structure shift, in my opinion, because if a failed PD array, like a bullish PD array here, this down close candle, an order block with the change of the state of delivery came and it got disrespected, that becomes an inverse. That became an inverse, and you can see with the other down close candle, the 50% was disrespected. It was respected at first, and then eventually it came and got disrespected, and it came, tap into it. They're using it as an inversion. There's inversion PD arrays. In my opinion, old highs and lows can become inverse. Order blocks can become inverse. You know, and this applies to any PD array, in my opinion, rejection blocks, anything, you know, you can use it as an inversion. And then eventually you see the drop, and that's kind of why we dropped really quickly too, because we were, you know, using that inverse with this inverse fair value gap with the order block, I should say. And that is pretty much why it dropped really quickly, because you had two PD arrays playing lower prices and wanting lower prices. You can see that. There's no SMT divergence. You can see we have a balanced price range created from this. So there was really no SMT divergence. Should have just been played off of higher time frame confluences and just trusting your higher time frame bias. There there was no liquidity sweep either. There was no sweep, just rebalance or redelivering into these two PD arrays and then eventually dropping. And again, that inverse, you could have just seen that again, you could have just seen equilibrium of the range from right here to right there. You can see you're in a premium and you're going to go drop back down into the discount, targeting some areas of discount, of course, some discount PD arrays, some bullish ones, I should say, and then just holding the trade to your final take profit. So yeah, this is pretty much the market maker sell model in display. Again, the time window for me, I probably wouldn't have taken this trade. Silver bullet would have been over right then and there. So you probably would have been like, whoa, I missed my trade. I wasn't able to take a trade this day because there was no, time window, or the time window wasn't really respected. You can just see a little fair value up, rally up, come back, rally down, and then eventually you see this. As soon as you see this, this would have been a perfect trade. Take these type of trades on a Friday. You got to de-risk yourself, or you got to be very cautious. One of the two, Again, in order for you to have that, you're going to want to use economic calendar to see, where the manipulation and where you can possibly find one of those trades. SMT to confirm, SMT with more confirmation, and then our time frame draw on liquidity with certain time windows of the day. It could be PM sessions, or the sessions I should say, or it could be during macros too. You can use a macro. Macros are very important. So economic calendar, SMT for more confirmation, higher time frame draw on liquidity, time windows applies to any. We're gonna use the market maker X model now. A lot of people already know what the market maker X model is. Very powerful in my opinion. Basically a top-down approach trying to find a market maker sell model or market maker buy model. I usually like to start off on the weekly, of course, and like to mark my external levels of liquidity, and then eventually my internal, of course. So these are my weekly external levels of liquidity. We drop down to the daily. You can see we're inside this internal range. I like to see if we're in a premium or discount. You can anticipate most likely, we are inside of a discount right now, so it'll be ideal to look for buys. This could be your external level on the daily. You can see we tapped into that and we took out some sell side, and we have another, this is an internal range on the weekly for sure though, but on the daily it's external, everything external below these lows. Go to the 1 hour. This could have been, I would anticipate it to be like this above this one right here, and then eventually the third one, like just full terminus up here, consolidating after that. So yeah, that's kind of what I'm expecting. Price, we can just retrace, run up above these highs, and then eventually drop, consolidate a little bit, and then eventually run up again, and then push above these highs, and then just start to consolidate, and then close the week off like that. Or it can be starting off like next week like that. It doesn't really matter to me, but that's kind of my market maker buy model right now for US 30, basically the market maker X model. And I showed you why we're going to be anticipating this. And if I'm wrong, then it is what it is. You can find lower time frame market maker models and use those to your advantages. Again, main reason why, because we have a buy side imbalance. We swipe some sell side, and I feel like we just have to retrace at least to this high, or this low, and that has become an inversion. But I do, again, I just really want to fill this fair value gap, so that's kind of why. And then eventually, if we want to rally higher, take out these buy side, and then that would be my final terminus for the trade idea that I just displayed to you right here. But again, you can't really just expect this to go the way you want it to. Again, the market is just really has a mind of its own. You can't control price, but you can control your price entry points. And when you click that button, so you want to wait for confirmation. I didn't do that. Wait for SMT. I didn't do that. Wait for mean threshold of an wait for the mean threshold of an order block to be hit, or consequent encroachment of the fair value gap, just to be as precise as possible. And again, just use SMT. You don't have to have market structure shift for confirmation. You can use an inverse. So yeah, hopefully you guys enjoyed today's video. Hopefully you guys learned something from it. And if y'all want me to make any other videos, comment down below what type of videos you want me to make. And until then, I'll see y'all.